I want to put some reality to the silver markets, and I still think that I don't know this, that the bottom for silver might not be in yet. There's other indications out there, real indications, that tell me that the bottom for silver may not be in yet. Whereas I would think I would be wrong is if silver goes solidly above 30 and continues on from there. Now, as the other indications I'm looking at is, for one, the Baltic Dry Index, and here it is. Like today, it was up a little bit, but it's been on a real good downslide since the end of May, all the way through into the beginning of June. And this is telling you what's going on in shipping. So shipping is slowing down. Now, I want you to also look at something else, copper. It's one of the best materials to look at to tell you what's going on with global production. They don't call it Dr. Copper for nothing. Now forget about the association where there's copper mines and silver mines. Basically they're together. You know, copper mines will usually produce some silver. Just forget about that stuff. Just looking at the prices. The prices of copper are dropping. We're probably not in for the bottom yet. But although I'm still going to state that I think silver is probably going to hit a record high this year. I think it's going to be that volatile. Now, I want to also point out something that a lot of people say you're not going to make money on the commodities. El Rongo, that's completely false. You are going to get ahead of what other things are going on in the economy. In other words, the general inflation rate and things like that. And just a little common sense. Right now, silver ratio to gold is around 55 to 1. When it peaked out last end of April 2011, it got down to about 31 to 1. Well, it could very easily go to that range, 30 to 32, or even to 28 the next time it takes off, or maybe even a little bit below that. In that case, gold is the thing that pretty much keeps up with inflation and keeps up with the consumer price index in reality. But silver is going to do about twice as good as gold. It's going to get well ahead of it. Now, the whole trick is to sell at the right time. Now, that's one thing to really look at, is that silver-gold ratio big time. Now, right now, where it's sitting at, it's bad. So I would never sell right now. And if you don't have any, you should buy silver. But, you know, today it's, you know, down slightly, but big deal, right? I mean, it's pretty much steady. It's only down 7 cents. But again, look at the ratio. The ratio right now is 55.8 to 1, the silver-gold ratio. Now, when things start heating up again, say they do some kind of massive QE, then they might. Because problems with the euro are not over with yet. Greek may exit the euro. There's a lot more problems going on in Spain. And until China actually does a major stimulus policy, I know they cut interest rates some, but until they actually do a major stimulus policy, they have a major slowdown over there. And who are they going to sell to? That's the whole key. Who are they going to sell to? Now, they have to build up their own economy, right? They're not going to sell to Europe. I mean, this Baltic Dry Index I just displayed actually states that global trade is slowing down. Shipping is slowing down. So they're not going to sell to Europe. I don't think they're going to sell to the United States, because the United States, the economy isn't that good. I think the numbers that we get for the primary manufacturing index in the United States are greatly fudged, to tell you the truth. And one of the reasons I'm looking at that too is, you know, the copper index, the unemployment index, and basically that they're shipping jobs out of the United States left and right, and they're going to China, right? So that's been going on for a long period of time. It's been going on for the last 4 years and that type of stuff. So I don't think the Chinese have a major market in the United States anyway. So a slowdown in China is going to weigh heavily in on the commodities. What's going to be bullish for the commodities if they have a war with Iran? That's a fact. That's really what's going to happen. You know, they close the Straits of Hormuz, the price of oil is going to shoot up, and the price of a lot of stuff is going to shoot up. Maybe the day that happens, all the other commodities might go down, but oil will go up, but the other commodities will start to skyrocket along with oil, especially gold first. But like I stated, I think the central banks are basically have their back up against the wall, and what they're going to have to do is print money. Mark Farber says this, but I could see this. It's almost like you can't go by day to day, week to week too much. But I'm going to say even this year, there's going to be a major turnaround. And I have a little suspicion about this event coming up in Olympics. I don't know if it is going to happen or not, but that could be a major point where things are going to radically change and the markets go down, and then the governments will react probably with money printing and that type of stuff. You'll see a major change. Actually, I think 2012 is going to be a very volatile year. That's really going to be the watchword. Volatility. And that's really where you can make out. Right now, silver seems to be a pretty good deal, but I would not buy in leverage because I still say the bottom's not in yet. But I'm not getting into this stuff where it's going down below 20. I doubt that. I think it just might go below 26. But that doesn't, once it breaks 26, I think they're going to react pretty soon because I think a lot of other things are going to be causing that to happen. And you're going to see, the S&P dropping hard and that type of stuff. And Ben Bernanke's going to act before things get out of hand. But we do have some indications showing us there's a slowdown going on. The copper prices are still dropping. The Baltic dry index is still dropping. And, silver is not going solidly above $30 yet. So, like I said, I think like I was stating before, I think a lot of things were just what was going on with Ben Bernanke and hints from the Fed. That's what people started pumping up the silver and gold prices because it was more towards speculation, even though they should be up a lot more. Now, I want to state something here on the end about the Rand Paul type thing. I knew there was a lot of things there's going to be a lot of talk about that. But I didn't trust that from day one. Unfortunately, you're not going to be able to do a hell of a lot politically. And, I don't think Ron Paul's ever going to be on a vice presidential ticket, although that's what should happen. But what should happen and what will happen is two different things. So, I think one of your best ways to fight the power to be is to buy the physical silver. Just don't go 100% into it. And, keep physical cash. That's another good thing. So, you're probably not going to be able to do it politically at a presidential level, that's for sure. You might be able to do it with your congressman or at a local level, and that's more important because at the presidential level, they got it cinched down really good. At that, I know. That's been like that for a long time. A lot of people don't want to hear that, but if you really examine into details what goes on in all the presidential elections for more than 100 years, the guys with the bucks got it rigged. They got that set up good, really good. It's like forget about it. You got to get it at the local level. Just want to point that out at the end of this video because that seems to be a hot topic. There's a lot of bullshit going back and forth about Rand Paul, and all this kind of crap. I think it was a setup. That's what I think. The whole thing. You really can make the best effect at your local level. And also, like I said, financial independence is one of your better bets. I mean, why would you keep too much money in a bank anyway? Because you don't get interest on it, right? Keep the paper stuff. That's the way I look at it. All right, so that's my advice. I think silver's probably might not have hit the bottom yet. There's a few indications. The copper prices, the Baltic dry index, and silver's not solidly above 30 for one. So just I think that's a good call. So just beware. It's going to drop down a little bit more, I think. And when there's enough problems out there, they're going to hit QE. They will. They're going to have to.